What's up, Andy?
Hey, Brian, how you doing?
Good, man. How's everything?
Yeah, good. All right. So, welcome. A very good morning, good afternoon, and good evening to all our audiences. Today is Thursday, May 11th, 2023. Hope everyone's doing well. Hope everyone's doing great. We have, as usual, our special guest with us, Brian Quinlivan from Santiment, and he's on once a month. And well, in the month of May. So it's been interesting since our last show. So, uh, Brian, I'll let you kick it off. Introduce yourself and Sentiment, and then off we go to see what's happening in the markets.
Sure, Andy. Yeah, thanks for having me as always. It's been a rough 30 days or so for people ever since markets topped just about a month ago in early to mid-April. and one thing that we're going to talk about on this call is the growing negative sentiment that's been showing up on social platforms and why that's a good thing. In general, it's Santiment. Uh, we talk about how markets generally move in the opposite direction of the crowd's expectation. So when they believe that markets are starting to look, too good for a buy the dip opportunity, they often get fooled and prices continue going down. When they often think that prices are going to continue to go down, like so many people think right now, that's often a good opportunity for you to uh, buy into everyone else's FUD and pain and lack of confidence in their investments. So yeah, we can definitely touch on that and more today, Andy. Oh, you're on mute, by the way.
Sorry, thanks for that.
No problem.
Yeah, no, I'm definitely looking forward to it because we're obviously we're always looking for opportunities, aren't we? So let's kick it off. What's happening in the markets, Brian?
Yeah, let's take a look at some of the Santiment metrics. Anyone who goes to Santiment, you can see the same kinds of charts that I have here. And we have a long-standing discount code with our friends here at EquitiesTracker. If you go to our pricing page, app.santiment.net/pricing, you can type in EquitiesTracker and instantly get 25% off of your membership. Or you can try it out for a week, see how you like it first, explore all of the real-time and top indicators that we have, and see why our platform is quickly becoming that platform where others go to see what others in crypto can't. So with that said, we're looking here at the past 30 days. Let me switch these to the past 30 days to match this one down here. And you can see it's a whole lot of red all over the place. Beginning with social volume, right? We talked about negative sentiment. Well, it starts when everyone just stops talking about crypto. And that seems to be what's going on right now. We have Bitcoin being talked about 18% in these past 30 days compared to the 30-day interval before that. Ethereum, 14% less. Tether, 14% less. Pretty much all of these, outside of a few outliers like Lido staked Ethereum, Internet Computer, Wrapped Binance Coin, Bitcoin BEP2, Rocket Pool, Pepe, still getting talked about a lot, makes sense, Radix, and Bitcoin SV. But every other asset in the top 100 market cap list of assets is being talked about less to significantly less than they were being talked about last month, meaning there are just less participants in crypto at the moment. There are more people that are tired of kind of waiting for prices to recover to those September 2021 all-time highs. They think that the markets have topped in April, and there's just a lot of doubt that Bitcoin can even reach back above 30K again anytime soon. And right now, dropping back to 27.5K, going as low as 27.1K earlier in my day today, just about 12 hours ago. Yeah, it's pretty clear that people are getting hesitant and nervous and think that this might be the time to bow out of crypto for a while. So that's why, based on our mantra, it can actually be a very good time to get into crypto. You can see that over the past 30 days, to look at a few specific highlights, Bitcoin's down 7%. Ethereum's down 4%. XRP, after a really solid April, down 17% now. Dogecoin down 14%. It's having particularly low sentiment at the moment. And we see that Matic is down 22%, Shiba down 19%. And then we get to the biggest drops in the top 100. Filecoin down 25%, Aptos down 25%, EOS down 26%, Theta down 30%, and Conflux Network down 39%. That's the biggest drop here in the top 100. So yeah, this is probably the most red I've seen in a 30-day interval since maybe June of last year, and that's when we were getting round after round of the Fed rising interest rates, making it harder for equities to continue to go up in exchange for helping to combat inflation and make up for all of those 2 years or so of almost no interest rates during when COVID was at its peak. So now we're at this point where prices have dropped quite a bit. We're still, just to give perspective, right? At the beginning of January, the beginning of the year, that's only about 4 months and change ago. We still had Bitcoin down at about 17K. Ethereum was sitting at around 11 to 1200. And, we're still far above those numbers. So it's all relative. You got to make sure to have perspective when you look at this and, go with the phrase, when in doubt, zoom out. When you are in doubt, you see Bitcoin here, 27.5. Yeah, Ethereum still at about 1836. So yes, prices are slumping, but perhaps people are being a little premature with their expectations that it's going to go right back to, where we started the year. And on that note, regarding sentiment, take a look at what we see here. We asked this just about, I'd say, 16 hours ago. And we asked, did crypto markets hit their 2023 top in April, which was just about a month ago, when we had Bitcoin just get below 31K. Ethereum got above 2100, I think very close to 2200. And then they've dropped, right? So surprisingly, we're seeing that nearly half of people think that this was the top of the year. And we aren't actually going to surpass those Bitcoin and Ethereum prices that we saw in April. And we haven't dropped that much, right? We just looked at this. Bitcoin's only fallen about 7%, Ethereum 4% since those tops. Maybe a little more than that, depending on the exact day. But you got the idea. This isn't a huge drop by any means, but still almost half of people say, yes, we've topped in April. That is significant for sure and shows just how much FUD is going on in crypto right now. So I'll take a breath here, but what are you seeing on your end about all of this, Andy?
Yeah, that's interesting. I've been following. So obviously, Jerome Powell just increased interest rates again, and then I think I saw a tweet recently on the inflation rate, and it does seem. I mean, if you look at the trend, it does seem like the inflation rate may be on there is a short trend that it's kind of on the way down. I think it's 6.3% now. For the year, and I think I guess you combine that with half the people in crypto thinking that that we've peaked and it's on the way down. It's a great combination, isn't it? I mean, look, obviously none of what we talk about right now is financial advice, but we're just presenting the data here and looking at it and thinking out loud what the masses may be doing or thinking. Yeah. So it's interesting, and I think if you're a long-term investor anyway, and when I say long-term, I mean in crypto, 18 months is a long time, 2 years is a long time. But whereas if you're a traditional investor, you're looking off time horizons of 5 years and more. If you really are a long-term investor and looking at it, crypto has, I mean, it's definitely made some headway in terms of adoption, but I think we're still early. I think if you're looking at the long-term horizon, there's a great number of people who do not yet understand what crypto is, and therefore I think it's still early days. It's kind of like when the .com bubble burst in, was it 2002, right? That was early days, and it was all doom and gloom. But look at where we are right now. The adoption rate has obviously picked up in a quarter of a century. So yeah, those are my thoughts.
And look, we're only getting closer to the halving, which is historically always a bullish event for crypto. Bitcoin's halving is estimated to be something around 50 weeks away. And every week that we get closer, the price will get more and more baked into that bullish event. In my opinion, I don't believe that we have a super low floor. There are polarizing opinions out there, and I've been proven wrong before, but I think that these calls of Bitcoin going back down to 10K are either way over the top from people who are very panicked, who maybe bought in above 30K last month, or it's people being disingenuous and they don't actually believe this, but they want the audience to believe it when they make those big calls on crypto Twitter here. And that makes it easier for them to buy at a lower price from all the FUD. And, speaking of that, with so many small traders getting a bit spooked right now, we can look at what's going on with our trusty shark and whale line right now, highlighted here in green. And you can see that actually, the accumulation for them, it's almost kind of inverted. They started accumulating on the 10th. The price topped on April 13th. And since the 10th, they have added approximately 0.29% more of the overall supply. That's a lot of money. I think it's hundreds of millions of dollars. And with that said, even though we're seeing this going on with the price since the top, right? I can draw a line and we can see that it's going down. But I call this a bullish divergence, with one of our top metrics indicating that there's actual accumulation going on here, while people are getting nervous and thinking that the top happened here and we're not even going to see these prices again in 2023. So yeah, I think short and midterm, there are some signs that prices can turn around and head back toward 30K. Long term, though, just remember that the crowd can very quickly flip back and go super bullish again, and then we have to be worried. We want the crowd to continue to stay very hesitant and skeptical that prices can go higher, even as prices go higher. And there have been, for example, throughout 2021, that was going on because everyone's saying, why is the price going up? COVID is everywhere. The Ukraine Russian war is a big deal. All these different things going on. And all of that doubt just fed prices going up higher and higher as whales accumulated. But yeah, right now, I think it's interesting to see that there is a slight rise going on, and there is accumulation undoubtedly with Bitcoin addresses that hold between 10 to 10,000 BTC. And then moving on from that, see what's going on with Tether. I mean, the long term, pretty much since mid-March, you go 2 months ago, the amount of the Tether supply being held by addresses that hold that key shark and whale tier of $100,000 to $10 million, it's still climbing. Maybe a slight drop here, but that's pretty normal. And it's just continuing to rise over time over the past 2 months. USDC, it's made a big recovery ever since all the FUD going on in mid-February that eventually started to dissipate in mid-March. BUSD, same thing. They went through their own trauma earlier this year, and they've been recovering with shark and whale addresses. DAI is really jumping up fast. They went down at the same time as USDC, and accumulation is going back up. So lots of buying power going in the right direction. You see that the two exceptions would be TUSD here and USDP. These are the 5th and 6th largest stablecoins by market cap. They are still fairly down, mostly kind of inverting with USDP inverting with USDC and DAI. And then TUSD has just been getting dumped for a long amount of time for various reasons. But overall, I like seeing that more and more stablecoins are being accumulated, and I like that Bitcoin has been accumulated rather than dumped over the past month, despite a lot of people calling the top.
Yeah, that's interesting. Another interesting fact, Brian, and maybe we can take a look at the data later. Is that I think Litecoin's halving is in August this year.
Absolutely, yeah. We put out a quick article. I should say a community member posted an article, and we put some extra words with it on our Twitter today.
Cool.
Right here. So check this out. Litecoin's small addresses have ascended quickly in May as sharks and whales have been up and down. So yeah, the big thing going on is Litecoin is suddenly seeing a ton of 1,000 coin or less addresses just accumulating like crazy.
Wow.
With 120,000 Litecoin combined being accumulated from these smaller addresses. And that's a lot of money for these smaller addresses to be accumulating over the first 10 days of May. So I think that's a good sign. But sharks and whales, keep in mind, they're kind of up and down with, especially the 100K to 1 million tier. They are definitely moving in the right direction since mid-April. So that is a good sign.
I also saw some tweets about the number of transactions on Litecoin having gone up quite significantly, catching up to Bitcoin's almost.
So would this just be regular on-chain transaction volume or something else?
Yeah, on-chain transaction volumes, yeah.
Yeah, we're seeing a little bit of that. It isn't enormously significant, but yeah, I mean, here over the past, I guess just in the past 3 to 5 days, there's been a bit of a climb here. If we put on a little indicator, very, very slight trading volume. It's had a few ebbs and flows. Active addresses might be what is most significant, though. I can see a very clear rise here, where the amount of active addresses per day was sitting around 16.8K at the beginning of the month, and it's risen and risen and risen, and now it's sitting at 47.3K. So it's essentially tripled where it was just 9 days ago.
Well, what does that indicate? Like, what does that tell us, Brian?
So it's indicative of the amount of unique addresses on the LTC network that are interacting with the network and making transactions. So even if transaction volume isn't going up by much, the amount of unique addresses are significantly making up for lost time and starting to exchange a lot more for, I'm not sure what reason. Would you know exactly what's going on with Litecoin and why they might be doing that?
I don't know. I've just seen some tweets about I thought it was the transaction volume, or was it the number of unique addresses going up? So probably more new Litecoin adopters. I'm not sure.
Could be, yeah. Yeah, on the whale side, not much going on. We saw these weird anomalies with 1 million or more Litecoin dollar transactions, but they just dropped back off. 100K is pretty steady. Yeah, I mean, if we look at whales, I guess we can look at around here for sharks. I guess we already looked at it in the tweet, so I won't go too far with that. But Yeah, I mean, dormant addresses, they're not really moving. The mean dollar invested age line is continuing to climb. We did see a little bit of a network realized loss going on, which can often feed into big rises, but it's a pretty minor one.
Okay.
But yeah, I think the active addresses are the big story for Litecoin. I'm very interested to see if that trend continues.
Yeah. Cool. Thanks for that, Brian.
Yeah. And then the buy versus sell calls, right? This is one of our more popular charts where we look at some of the most positive keywords like buy, bought, bottomed, or bullish, and we compare that to sell, sold, topped, or bearish. The blue lines are the positive keywords, red are the negatives. And we highlighted this right here. I'll actually show it on the tweet because we drew some arrows with it. Check this out. So there have been two major bounces over the past week. The first one was on May 8th, and it coincided perfectly with these negative spikes here, where a lot of people were saying, prices are going to drop, crypto's topped, time to sell, stuff like that. Price immediately goes up by a little bit. Then people start to get a little bullish again. You see these blue spikes. Price starts to stagnate and chop. It goes on a little bit of a run here to open up today, my time today. And these red spikes appear again after. It's very hard to see because of the green line blending, but this is where the price dropped, where my mouse is.
Yeah.
And that's when all of the negativity bubbled up again, and immediately we see another bounce. So that really is a perfect indication of why avoiding going with the crowd consensus is generally a profitable venture. And I think it illustrates it well.
Yeah. Cool.
But yeah, what other stories and just overall things in the markets are you seeing and maybe interested in checking out a few metrics on?
I'd be interested to check out to see what's happening with Ethereum if we could spend 5 minutes on it or something.
You bet. So Ethereum's been up and down. It's certainly stayed up with Bitcoin in the long term. It's been one of the, as usual, one of the assets that does not get hurt the most, just like Bitcoin. And you can see it pretty clearly on this chart here. Ethereum's actually been one of the better performers, being only down 4% over the past 30 days, even exceeding Bitcoin. So it's cut into Bitcoin's price dominance that was really crushing it in March and April. It's cut into that a little bit over the past 30 days. And if we go to some of the key metrics, we can see trading volume is pretty much average, on-chain transaction volume average. Active addresses not really showing any serious signs, and it's also not being talked about significantly more than usual. If we go to the MVRV, though, there could be some good hints here. So Ethereum's 30-day traders, those traders that have been active in the past 30 days, they're actually down 4% on average. That means that we're at a less risky time than average to add on to your Ethereum position or open a new Ethereum position. Meanwhile, the 365-day, they're still up quite a bit. It looks like the big jump, above 2,000, it has propelled long-term traders into profitability. And ideally, we like to buy when both lines are below the zero axis, like right at the beginning of the year or late December. And as you can see, if you bought in any time from December 16th, to maybe January 3rd or so, you would have made, just dragging from January 3rd, price is up 52% since that day. So ideally, this is what we'd want to see, but it's at least a good sign that the midterm 30-day traders are negative once again, meaning it is a beginning to look a little better.
Yeah.
Whale transactions, we're not seeing much. As far as, I've got a better template here, actually. So as far as the 100 to 1 million ETH addresses, these addresses collectively hold about 62%, but that's in contrast to about 5 months ago when they were holding about 66%. So they've dropped about 4% of the supply. Not my favorite to see that. I think it would be a lot better if it was at least staying neutral. We're about 8 months after the merge now, and it looks like, ever since these sharks and whales are letting go of some of their ETH. It can be a little misleading though, because there's so many big addresses that break their Ethereum into many different addresses for the purposes of DeFi. So to always take the whales for Ethereum with a grain of salt.
Yep.
Funding rate is fairly neutral for Ethereum as well. Let's see if there's anything else over here. Dormant address is not really moving right now too much. This is interesting to see that the supply in exchanges is continuing to drop lower and lower. It's down to 10.17% of Ethereum on exchanges as more and more get into DeFi and other things, maybe just self-custody. So if we look at, let's go since 2017, it's been quite some time since we were this low. It's actually exceeded the low that it was in May 2018. So I'll probably put out a post about this pretty soon after seeing this on this call here. If we go to the all-time levels, this is pretty much the lowest it's ever been since Genesis for Ethereum.
Wow. Yeah.
So if you're looking for a positive sign, the less of an asset that is sitting on exchanges, the less risk there is of another huge sell-off, because there can only be so many coins that are sold off and they need to be on exchanges for that to happen. So oftentimes a good leading indicator is, you see a sudden inflow like this or like this of coins moving to exchanges, followed by a big sell-off that can push down prices. Yeah. But right now we're continuing to move down, and you can just see all the outflows compiling pretty much over the last couple of years.
Yeah, that's interesting. Looking forward to your post on looking forward to that post on Twitter.
Absolutely, man. Yeah.
Yeah. Hey, I think we're probably about time, yeah?
Yeah, for sure. Yeah, I think we've covered some good stuff here, and I'm looking forward to talking with you next month to see if the Fed have actually halted their interest rate hikes, and people are right that this last 25 BPS one was the final one for now, at least.
Yeah, let's see what happens. It's definitely interesting times that we're in, and there's, I guess, it's the number of times the interest rates have been increased. Even during Volcker, I think he did a 2x increase in interest rates. Jerome's done how many now? Was it 5 or 9x of the interest rates from where it was? So
6% in the last 14 months.
Yeah. So it's pretty insane. So yeah, definitely looking forward to what happens next. Once again, Brian, thank you so much for your time, and thank you for sharing with the audience. Anything else you'd like to say before we end the show?
No. I think that about covers it. I appreciate the time as always, and stay safe out there. Thank you to everyone who enjoys these catch-up calls with Santiment and EquitiesTracker. We, both us and Andy, really appreciate your support.
Yeah, we definitely do. And as usual, always thank you for tuning in. And I'm always very appreciative of Brian for giving us his time and sharing with us the metrics, the on-chain metrics. It's invaluable insights.
My pleasure, man. It's always great to be here.
All right, have a great one, everyone. Have a great one, Brian. Thank you again.
Take care, everyone. Bye-bye.
Okay, bye-bye.